Hello traders. So I came across the best 5-minute scalping strategy that you can apply to your trading system and be profitable, guys. So if you're new around here, my name is Junior and I help out struggling traders to learn Forex in the easiest, simplest way possible. So if you're new around here, guys, make sure to subscribe to the channel, turn the notification bell so that you never miss out whenever we post a video, guys. Let's get started with this 5-minute scalping strategy. So traders, the 5-minute strategy is going to rotate around the engulfing bar pattern. So this is a very strong pattern and it's all about price action. So this engulfing bar pattern, first of all, the word engulfing means something, we have to have something small like this and something big. So whenever we see this pattern, guys, we can take a very quick scalp trade. Let's say on our 5 minutes 5-minute time frame, and then also on 30 minutes time frame, even on 1 hour time frame, we can take trades. So guys, first of all, we need to understand what is an engulfing bar candle. So an engulfing bar candle is just, we need to have two candles. One has to be a small one and one has to be the big one. So the big one is the one that is engulfing. So in this case, this is a bullish engulfing candle pattern. This is the red one, which represents the bears, and this represents the buyers. So meaning this is a bullish engulfing bar candle pattern. It's a reversal. The buyers are engulfing the sellers. A small bodied candle, which is red in color, represents less sellers in the market, and this represents more buyers in the market. So meaning market has to reverse and go back up. So then this is the bearish engulfing candle pattern, because this is the small green one and this is the big red one. Less buying pressure, more selling pressure. This engulfs this. Then we have what we call a bearish engulfing pattern. So this is the illustration that we have, the first illustration. So this is now the bullish engulfing bar. So the bullish engulfing bar pattern, we find it on a downtrend when price has been coming in a downtrend like this. Then we get to see it at the bottom like this. And then price has to reverse. As the moment this appears, we know, okay, there are no more sellers left in the market. Buyers have come in with momentum. That's why we always take our trade just up here. And then price goes back up. So this is the bullish engulfing bar pattern. Then this is the bearish engulfing bar. So as you can hear the word bearish, meaning we need to have this on an uptrend, and then price has to reverse and come down as long as this pattern appears. So as you can see, we have an uptrend, then small bodied green candle, less buying pressure, a big bodied red candle, which shows more selling pressure. Then we get to take our trade just on the next candle, put our stop loss above here, then price drops. So this is now the bearish engulfing bar candle. So guys, we're going to apply this on all our market structures. Remember, market structure has 3 components: uptrend market, downtrend market, and sideways market. We're going to be applying this pattern on it so that it can be our scalping pattern. We can use this to grow smaller accounts. So the first one is a upward market, or what we call an uptrend. So traders, whenever we are on an uptrend, we like to see reversals. Most of the people think this is an uptrend, then we shall just see a reversal coming. No guys, even these are reversals, because this is like a mini. You see, this is a big impulsive, but when you reduce the time frames, this can be an uptrend. So this is impulsive retracement. So this is a reversal. You see, reversal. So we are only going to take trades on a part like this, like that. Whatever they have marked out, that's where that's the only points where we find that pattern, because remember, it's a reversal. So what do we find here? We find here a bullish engulfing candle, then here we find a bearish engulfing candle, then here we find a bullish, bearish, like that. So this is where we apply these patterns, guys. So whenever you're looking on your uptrend market or downtrend market, look at these levels here. This is where you have to look at. Don't look in here. Look here. That's why you see, you can even see we have a bearish engulfing. You see, this is small and this is bigger. So that's why we find those candles, traders. You can even see here we have one here and we have another one there. You can get, traders, you have another one here, another one here. So this is now our sideways market. You can see this is a sideways market. This is a downtrend, but again, in a downtrend, you can have sideways market, or which call a ranging market. A ranging market is just the one that is ranging in a fixed zone, resistance and support. So you can see as price breaks out and does all this. So the next step now, we are going to show you how we apply it and what do we look for. Whenever we have an uptrend like this, we are going to look out for strong levels or levels that price has rejected to break. As you can see, this red line right here, this was a resistance level right here. So if price failed to break this level, making this a higher high, then price comes back down here to retrace or to form a high low. Then again, when price comes back to break this level, you can see now this level becomes support. And as you know, whenever price breaks a resistance level, that level becomes support. That's why price comes back here. But again, what do we have here? We have a bullish engulfing candle pattern. Remember, as you can see right here. So price goes back up. So meaning, whenever you're waiting for retracements, always wait for this pattern here to appear. Then you can take your scalp trade. You can go in for 20 pips, whatever you want, guys. So this is a good example. Let's go to example number 2. So our example number 2, we have applied now an indicators. You know indicators, they smoothen out price action for us. Now, since this is our strong zone where price has broken, as you can see right here, and now it's a resistance. So which was a resistance, now it's support. As you can see now, price breaks, this becomes support, but price doesn't come back to retrace here. But again, remember, when we have our moving averages, as you can see, we have the 8 moving average and we have the 21 moving average. So you don't only wait for price to come back and retest at this zone here, you can also wait for price to come back and retest on the moving average. So look here, what does price do? Price shoots up with an impulsive move, then it retraces exactly at the moving average right here. So what do you have after here? Price is going to shoot up, you know, because remember, we also use the moving average. Whenever price retraces, we can always take trade off this. But again, what do you have here? We have a bullish engulfing candle and then price shoots up. This is another example. This is how you can apply this and then be able to take your scalp trades very fast, guys. So this is the example on a downtrend market. So remember, whenever we have a downtrend market, we are only looking for sells. Now, how do you look for sells? When price, because you can see this was a fixed zone right here, this was a strong zone here, this was a support level. Now price here breaks our zone and then it comes back here to retrace. But again, as I told you, when you apply the indicator, which is called the moving average, we always going to look for a retrace. As you can see, price retraces into this zone here, this box here, then price forms our pattern, which is the bearish engulfing back candle. As you see, price drops again, price comes back to the same level here and forms the same pattern here, and then price even drops even more, guys. This is very easy to apply and to implement into your trading system. You know, this will avoid you from trading on every market. You can either use this as a scalping strategy, you can use it as to hold trades, because whenever you take trades here you can see price never comes back here to hit your stop loss. This is a very good indicator. So now let's add in even more confluences. So now I've added in a Fibonacci retracement. So as you know, if Fibonacci retracement, it helps us know how far retracement will go. So as you can see, we have impulsive retracement. So how do you apply the Fibonacci? Apply from the swing low to the swing high on an uptrend. As you can see now, this dotted line, that is our resistance and then support level same time. So price breaks, comes back to retest this at this red line, this same line here. But remember, we said on the Fibonacci, this is where this point 50 or 61, this is where the Fibonacci, this is where price always reverses from on the Fibonacci. But again, you can definitely know price just broke this resistance, which was resistance here, and then it has found support here. But again, even the Fibonacci is telling you literally the same thing, guys. So you take your trade when you see our pattern, which is called the bullish engulfing candle. You can see big bull candle and the small red candle. So price goes back up. This is off using a Fibonacci retracement. So this is on the 4-hour time frame. You can see here 4-hour time frame. So literally, you can, if you go in after this price has broken our box here, if you go in here and then you measure from here to here as your target, from here to up there, guys, this is more than 200 pips. So now this is applying the Fibonacci on the downtrend, but again, we're only going to look for our engulfing candle pattern. We have a downtrend market, as you can see, very nice market to the downside. As you can see, we have a big impulsive to the downside push. See, but again, we always take notice which is the major level where we think price can come back to retrace and then go back, push back down. This is the level, as you can see. This was the support level, you can see right here. So meaning when price came back here, price had to find trouble breaking here. So how do you apply the Fibonacci? We apply from the swing high to the swing low on the downtrend market. So swing high to swing low, this one here, then we drag it to the future. So that we can see how far price will go. As you can see, price reversed from the 61 level right here. So this is where we always expect price to reverse from. But again, guys, even without using the Fibonacci retracement, you can definitely know by just looking at the historical data, price always retraces at levels where it has been, or it always retraces at support levels or resistance levels. So this is on a downtrend market. So traders, we can't go without choosing the trend line as a strategy also. So being able to apply the engulfing candle strategy on this trend line is also one good thing, because remember, trend line strategies are always the simplest. All we have to do is connect 2 points so that we can, you can draw a level where price is going to always respect. So whenever price comes back to this line here, it's always going to drop off and go down. As you can see right here, price drops off, and then price drops off here, as you can see. So this is our trend line, the red one, and then you can see here, right here, when price comes back here to reject, so you literally know price, if comes back to this red line, it's just going to bounce off and come down. But again, this is one of the best patterns to look out for: the bearish engulfing candle, even this one, even though they didn't put it in the box, but I said bearish engulfing candle, as you can see right there. So you take your trade, put your stop loss just above there. Price never turns back to hit your stop loss, depending on what time frame you're on, but mostly I recommend the 4-hour time frame. Same to the uptrend market. As you can see, when we apply our trend line, the trend line is always respected. The trend line just works as the moving average. Price always retraces on the trend line, as you can see right here. This box here, this is where we have our bullish engulfing candle, and then price shoots back up. So trend line is a very strong one to use when you're trading in the market. So traders, and lastly is our sideways market. The sideways market is the ranging one that most of people think it's very simple to trade, and yes, this is the simplest market to trade in. So where do we trade in this market? We always trade at the resistance level and then on the support level. We always love to take trades on these 2 levels, because this is where the buyers come in and this is where the sellers come in, at these 2 levels right here. So always look for our engulfing candle pattern here, 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 and here. This is where we're going to look for those engulfing patterns, guys. And lastly, avoid markets that are like this. These are called choppy markets. Always avoid this. There is no volatility, there's no movement into this market. So if you take a trade here, price will just be bouncing in and in like that. There's no movement totally. So traders, that was all for today. So traders, if you have enjoyed that simple video about the 5-minute scalping strategy by using the engulfing candle, guys, make sure to subscribe to this channel, guys. Whatever you need to get rich, guys, you have all it in your phones. It's all over the internet. That strategy, guys, you underestimate these books that will give you trade. I found that strategy years back when I was just a beginner trader in the Bible candlestick Bible, and all of you have that book. So guys, go back into that book, look up for those strategies. Stop looking for hard strategies, smart money concept and all that. First stick to these simple ones and try to take trades off them, guys. So make sure to subscribe to this channel, turn on notification bell so that you never miss out whenever we post a video, guys, and keep on subscribing, guys. Share this information to everyone. Let's reach more and more people around the world, guys. I'll see you in my next video. And again, candlestick Bible, don't underestimate this book.